Hey there, Lincoln here from bullacademy.org. Today, let's walk through what a SPAC is, how it works, and what happens after the merger is complete. This will be a very quick and thorough walkthrough of how SPACs work, but if you want deeper explanations on this topic and related topics, then search our previous videos on SPACs at bullacademy.org on YouTube. And just real quick, if you like the video, like it below, subscribe to the channel, and join us over at patreon.bullacademy.org to join our Discord channel and get more access to me, because that's where we discuss the stock market in real time. Let's hop in. A SPAC is a special purpose acquisition company. SPACs are publicly traded on the stock market. The sole purpose of a SPAC is to acquire another company or multiple companies. Usually and recently, a SPAC will target a private company to take them to the public markets. In order to acquire the target company, the SPAC must have enough money to acquire a large stake in that company. Usually it's a minority stake. The SPAC managers must raise the money from wealthy individuals and organizations, otherwise known as institutional investors. Also, in order to take a private company public via a SPAC merger, the SPAC itself must be a public company. To achieve those two goals, the SPAC must go through the initial public offering IPO process. Unlike most other IPOs, the SPAC may offer warrants alongside common shares in units to sweeten the deal for investors. After its IPO, the SPAC must put the money it raised from its IPO into a trust fund. The money put into the SPAC's trust fund can only be liquidated under two circumstances. One, to complete the merger with the target company if shareholders approve. And two, to shut down the SPAC and return the money in their trust fund to their public stock market investors if the managers fail to acquire and merge with another company. That means that the money in the trust fund is safe and public shareholders of the SPAC are entitled to their share of the money in the trust fund if the SPAC fails. Usually, the money in the trust fund adds up to about $10 per share of the SPAC, minus a few cents for operating cost. But that depends on the terms of the SPAC's IPO and how much they raised. This unique feature of SPACs make them especially advantageous to public stock market investors who are in search of the added safety and asymmetric risk. Aside from the money in the trust fund, the SPAC may also need to raise money from private investors in order to afford larger targets. To do that, the SPAC may raise a PIPE deal, private investments in public equities. Now with the money safe and earning interest in the trust fund and PIPE deals raised, the SPAC sponsors go on the hunt for a target company to acquire. Usually, the SPAC has 2 years to complete a merger. If they run out of time, the SPAC shareholders can grant them more time or force them to shut down. Once they find a target company, the SPAC may announce their letter of intent, LOI, to acquire the company. However, at this point, the SPAC and the target company may still be negotiating the terms of the merger. Both parties can still choose to abandon the deal without penalty. If they come to an agreement on the merger terms, the SPAC must announce the definitive agreement, DA, between the SPAC and the target company to proceed with their merger plans. With the target company secured, the SPAC and the target company must fulfill all demands and requirements by regulators such as the SEC and the FCC. This step may take a few months to complete. Along the way, the SPAC must report material events to their shareholders. Once all requirements are fulfilled, the SPAC must call a special shareholder meeting to vote on the merger. If the shareholder vote passes, the SPAC and the target company must complete the merger. Once the merger is complete, two main things happen to the SPAC. One, the SPAC is dissolved and is no longer a public company listed on the stock market. And two, the merged company becomes publicly traded on the stock market under new stock and warrant ticker symbols that were predetermined by the SPAC. Usually, the merged company will take on the name of the target company, and their stock ticker symbol will resemble that name. Also, any lockup periods that may have been agreed to by private investors in the SPAC and in the target company begin. Usually, lockup periods are between 3 and 6 months, but there may not be a lockup period at all. And during the lockup period, previously private investors are not allowed to sell their shares. With the merger complete, the merged company now has access to the funds raised by the SPAC in its IPO and PIPE deals. Finally, the merged company operates like any other publicly traded company under the same regulations and guidelines. Okay, that's it. That's all you need to know to get started investing in SPACs. I know it was very fast, but I hope that this video gave you a better idea of what SPACs are, how they work, and what the benefits are for private companies and public investors, especially retail investors like yourself and like myself. If you want deeper explanations of SPACs and the topics mentioned in this video, then go search bullacademy.org on YouTube to find more of our videos that break down all of these topics in great detail. And if you want to learn about warrants and SPAC warrants, we have the top ranked video on warrants on Google. So go watch that video if you don't know what a warrant is yet and you don't know how they work with SPACs. And if you want to help us continue to make these videos and you enjoy them, then like the video below, subscribe to the channel, hit the notification bell, and comment your thoughts below on all the topics mentioned here. And if you would like to help the channel grow, get more access to me, and get direct answers to your investment questions, then join us over at patreon.bullacademy.org. You'll be able to engage on our Discord channel where we share knowledge and discuss the SPACs and stocks that we're all invested in to help one another build our wealth together. And that's where I share my early research into companies that I'm becoming more bullish in and companies that our patrons are also interested in. And of course, you have a chance that we need $200 every month just to be a loyal and engaged patron. So if you're interested in all of that, then join us over at patreon.bullacademy.org. I'm Lincoln with bullacademy.org. Thank you again and have a great day.